There are massive changes on the horizon in the wake boat marketplace. Let's take a look at what's coming in 2025. What's up, guys? This is Mitch from Boardco. When we look ahead at 2025 at what the market is going to be like for wakeboard boats and surf boats, there's a number of different questions that come to mind, and probably the top one on the list that you may have is whether it's a good time to make a purchase of a surf boat. There's a lot of factors that go into answering it, and it's not just about the boats themselves, but also about a lot of other factors that we're going to cover here today. We're going to talk about macroeconomic indicators. We're going to talk about shifts in dealer networks. We're going to talk about inventory levels and the overall trajectory of the surf boat industry. Today, I want to break this all down for you, and by the end, you should have a better understanding of where the market stands and how that may influence your decision to buy a boat in 2025. First, let's start by considering the broad economic picture. We just had an election. Things are changing and shifting going into 2025, both from a policy standpoint as well as just the overall market conditions in general. The general climate, at least when it comes to indicators that affect the towboat industry, is looking pretty positive. The economy is stable. Many of the key factors like wage growth, tax implications, and regulatory changes seem to all be trending in a direction that benefits the surf boat market, and particularly consumers that are looking to buy a surf boat. Now, with the new administration that's coming in 2025, we have to look at what the tax implications and the regulatory policy changes are going to do to the surf boat market. And are these going to be a positive impact if you're shopping for a boat, or are they going to have a negative impact? First, let's talk about taxes. In 2025, there's certain tax adjustments that may come in as part of the new administration's plan and approach when it comes to taxes. Now, the vast majority of these are probably going to be beneficial for the surf boat market, as well as for individual consumers that are looking to buy a surf boat. The new administration's approach to corporate, inheritance, and capital gains taxes could create a more favorable environment for boat buyers. Generally speaking, the people that are in the market for a surf boat are going to benefit from a change in direction when it comes to policy, especially when we start talking about things such as inheritance, capital gains, and corporate income tax. There's also a sense that the adjustments made to manufacturing regulations could help stabilize production costs, potentially keeping sticker prices from going up. Regulatory changes can influence everything from component sourcing to how dealers can move inventory off their lots. And in this case, it appears that the changes on the horizon may help smooth out the supply chain disruptions and keep overall costs in check. There's been some significant changes recently when it comes to environmental discussions in regards to boat manufacturing that, if they get curbed slightly, may have a positive impact, and manufacturers may be able to adjust the ways that they're building boats that can save a little bit on cost, as well as actually, to some degree, build a better product, which would be great from that end. Now, the next thing to hit on is specifically talking about a very important element that is been a very hot topic for the last few years, and that is interest rates. Over the last few years, we've seen rates fluctuate quite a bit. They went up for a lot, and they've been trending downwards, which has been really great. Interestingly, which you may not expect, boats don't necessarily follow the same interest rate structure as the Fed funds rate. It's kind of like mortgage rates, but it's actually not even exactly that way, and differs from the Fed funds rate even more dramatically than mortgage rates do. So over the last few years, boat financing went up significantly, and it's actually been on quite a downward trajectory for about the past year and a half. And so they stabilized for a while, they've been heading down, and they're actually trending lower compared to the Fed's fund rate than what we have really ever seen historically, at least whatever I have seen over time. So boats are financed differently than homes or cars, and lenders are actually looking to reallocate their capital portfolios, and they're putting more emphasis onto recreational and boat loans as compared to other different lending opportunities that they have. This means that they've gotten fairly competitive, and interest rates on boat loans are now closer down towards that base Fed reserve rate than what I have ever seen them at in history, which is really unique and kind of unexpected, at least not expected from my perspective is. One interesting point here is when it comes to boat financing rates, they've actually been dropping for a while, for about the past year and a half, and have been dropping faster than the Federal Reserve has been cutting interest rates. And that is primarily due to capital reallocations from the different banks and lenders wanting to make sure that they allocate things to balance their portfolios effectively. What this means is that the interest rate environment for recreational boat loans has gotten really competitive, and certain banks are willing to loan at interest rates that are way below what we would typically expect. They've been dropping for a little while now, and that trend is probably going to continue in through 2025. If the Fed cuts interest rates even more, those rates could drop slightly, though according to the market analysis that Wells Fargo Bank has done, they're not expecting interest rates in the recreational towboat industry to drop significantly over the course of 2025. We expect interest rates to come down slightly, but they've already been dropped down below where we were expecting them to go in 2024, and so the Fed's fund rate is probably going to catch up. What that means is that the interest rate you're going to get at the beginning part of 2025 isn't probably going to dramatically change from where it's going to be at the middle of the year or towards the fall of 2025, and if there is a reduction, it's going to be relatively slight. The other thing to note here is if rates do in the future over the next year or two drop significantly, you could be in a great position to refinance the boat. You just want to make sure that you are buying a boat that is not going to depreciate dramatically in value if you may be potentially looking at doing that. So with that said, that leads us to a crucial question regarding inventory and depreciation. Let's take a look back at 2024. If we look at the 2024 market, one thing that is really interesting is we can actually see exactly how many boats were sold by every single manufacturer nationwide because it's based on boat registrations that is public information. So the overall market for towboats was down roughly 11.5% year over year. Now, from 2023 to 2024, the entire towboat market was down roughly 11.5%. Though it's really important to note that this dip has hit different manufacturers substantially more than others. Certain brands entered 2024 on shaky ground, and the ripple effects continued all through 2024 and will continue into 2025. So there's a handful of towboat brands that entered 2024 on really shaky grounds, and they had some real bad blowback in 2024, and the ripple effects of that are going to continue into 2025 and honestly probably into 2026 and beyond. So what does this mean for you? Well, let's break down the data and look at it from brand to brand and see what kind of insights that we can end up pulling out, because not all manufacturers are in the same boat, so to speak. Forgive the pun. So in 2024, the brands that had the biggest drop were Malibu and Axis. Now, the reason for this major drop was because its largest dealer, which was Tommy's Boats, went bankrupt and shut the doors at basically all the locations. Now, there's some legal questions hovering over that situation, so I'm not going to dive deep into that, though there's a lot to dig into there. But the bottom line is that Malibu's dealer network took a massive hit. Tommy's, when they went down, had a significant number of boats. A lot of those boats are still up in the air. They're owned by the bank. They may end up hitting the market at some point. And this is particularly bad news because it wasn't just Tommy's that was in a bad position. In fact, most Malibu dealers nationwide are sitting on a larger amount of inventory than they would definitely like. And a few of the dealers are sitting on massive amounts of inventory. And it's not just 2024 models that haven't sold yet. It's actually even still 2023 boats going back. So we are dealing with boats that are effectively like used models that are really putting pricing pressure, driving the value of those boats down significantly. Now, on the surface, this could sound like there's a great opportunity to buy a boat at some big discounts and get a great deal. And if you're comfortable with the situation, that might end up being the case. However, there are some longer-term implications when it comes to this. When you have this much excess inventory that's in the field, what it does is it leads to significant depreciation that goes in effect long-term to these different brands. Generally speaking, if you'd buy like a 2023 or 2024 Malibu, you might get a better price up front, but there's a good chance that your boat's value is going to drop much faster than it normally would if you had bought a boat and had it for a year or two and then turn around and sold it. So if you're planning on holding a boat and holding it for a very long time, you might be able to get a decent deal, but these downward price pressures are just going to continue. So the next boat brand that actually took a significant negative hit was Taiga and ATX, and their market share slipped fairly significantly. And this probably is just due to demand for their products not being what it was before, especially now we're in the post-COVID slowdown, and the surge in purchases for people that are just looking to buy a boat without doing as much detailed research has cooled off. The reason could be tied to changes in their dealer network or the rise of stronger competitors. I really honestly don't know the details as to why they've changed and why they've taken such a hard hit, but I know that they took the next biggest hit compared to Malibu. So whatever the cause is, the slowdown in sales might suggest that you as a buyer might want to consider similar issues with depreciation and difficulty in selling your boat moving forward if you're looking into those brands. Now, on the other end of the spectrum, there's brands that weathered 2024 downturn pretty gracefully. So one example is Nautique, for instance, saw a slight decline in sales, about 4% year over year, but compared to the rest of the field, that's pretty good. Given how the rest of the market performed, they managed to gain market share because they didn't drop nearly as steeply as everyone else. And that might be a sign that Nautique is going to hold a better value going into 2025 and have really good purchase options for buyers that are looking at resale value. Some of this is also due to just the fact they're making a really good product. So Nautique's building a good boat. They're charging a premium for it, which is part of why the sales have decreased just a little bit, at least from my perspective, but they're doing a great job and you're getting a good quality product, and they have a really good relationship with dealers, which means that they don't have massively oversaturated numbers of units out in the marketplace compared to some other different brands. Now, with that said, the big standouts when we look at all the market share data are two brands, Centurion and Supreme. Now, the reason why Centurion and Supreme stand out is they're actually the only two brands that not only increased their market share in 2024, but actually increased their sales. That means while the rest of the market was down roughly 12%, Centurion and Supreme jumped significantly. So Centurion rose roughly about 3% in sales, which is pretty good compared to everyone else being down, and Supreme jumped nearly 12% year over year. And when you factor in that the entire market was down 11%, that's a really significant feat. Now, the really interesting thing when we look at this is that Centurion and Supreme are sister companies, meaning that they come out of the same factory and they're essentially the same brand, with Supreme being a sub-brand to Centurion, where it could be a little bit of a different perspective if, let's say, Supreme was up, Centurion was down, or vice versa. But what it means is that all segments of what that brand sells were up, from the entry-level price points of the Supremes all the way up to the high-end flagship RI series on Centurion. Everything was up. So the question is, why are they up in sales, up significantly in market share, and every other brand is down a minimum of 3% plus? Well, the answer to that is it's probably a combination of a few different factors. First one is they have the lowest inventory levels at dealerships of any boat brands, and this can have significant positive impacts. In fact, Centurion and Supreme's inventory levels are so low that they actually probably cost them sales. So they may have grown even more in 2024 if they had higher inventory levels, mainly because if you go onto the lot of a Centurion and Supreme dealership, they don't have the super low closeout boats that a lot of other different manufacturers have. And so there's not as many quote unquote deals to be had. The real question that comes in though is, what is a deal? If a product is in extremely high demand, are you really not getting a good deal if you can buy it at a fair price versus other product that, yeah, the price tags drop, but so is the demand. So that's something to just definitely keep in mind when we're taking a look at it. One of the other things that factors in when it comes to their inventory levels as well as the demand structure is that the way that the factory has navigated things on Centurion's and Supreme's end has been pretty remarkable. They managed their production surge during COVID significantly better than any other brand. Their market share jumped dramatically going through the pandemic. The other different thing to consider, though, is that there's other brands that had a jump in sales during COVID and a jump in market share, and they weren't able to hold on to it. Their demand slipped back down after COVID, where the demand for Centurion Supreme has actually increased since COVID. And they not only were able to dramatically increase their sales during that COVID surge, but they kept holding on to that market share even after. So one of the ways that they were able to do this is they kept a really close eye on the demand and the supply chain issues and adjusted their production proactively. One other benefit that they had is that they were able to manage their supply chain and sourced a lot of products directly in the United States instead of relying on overseas production. So by doing this, it made it so that they were able to have a much better managed supply chain and continue building boats while other different factories were shut down. This puts them in a really strong position entering 2025 with not a big glut of old excess inventory and a healthy level of demand, the double whammy there. Now, the other really interesting thing, because I mentioned supply chain, is to point out one of the big things that's being discussed right now when it comes to the economy in general, and that is tariffs that could be enacted by the Trump administration. By building boats that are primarily built using products and materials that are sourced in the United States, the impact of tariffs is going to be significantly reduced, which could further increase the demand and further increase the market share that Centurion and Supreme are experiencing. So the question is, what does that mean for you? Well, if you're looking at boats and you end up looking at a Centurion or Supreme, there's a good chance that you could expect significantly lower depreciation on those boats compared to other brands that have way too much inventory in the field, that are struggling with oversupply and struggling with as much demand. And so therefore, you may end up having a significantly lower overall cost of ownership. So the high demand paired with controlled inventory means that Centurion Supreme has been able to maintain their value more effectively moving forward. We saw that in 2024. It's probably going to continue in 2025. So from a supply chain perspective, Centurion and Supreme actually have another advantage that I didn't mention. So while all towboats are effectively built here in the United States, not all brands source their components domestically, or rather, better said, some brands source significantly more of their components domestically here in the United States. This is one area that Centurion and Supreme have put an extremely strong emphasis. Even down in components like towers and other structural elements throughout their boats, they're built here in the United States from the ground up. Now, this strategy insulated them from some of the worst supply chain disruptions that hit the industry during COVID, and it is really paying them dividends now. So stable supply lines and significantly less exposure when it comes to tariffs, which is something that the Trump administration has really championed that they're going to put forward, are going to probably contribute to a much more stable price environment for Centurion and Supreme, with way less risk of sudden costs spiking up and jumping up than what you may see from other different boat brands. There's a possibility that other different brands will have a significant jump in pricing if tariffs are implemented, where Centurion and Supreme are pretty well insulated from that, which could give them an even stronger advantage moving forward. So now that we got that covered, let's circle back to the macroeconomic environment and consider what this means for you as a buyer. So overall, the economy is expected to remain solid with policies that are favoring both buyers and manufacturers. So many of the regulatory changes that are set to potentially roll out could lower the production costs for boat manufacturers and potentially keep prices steady, or at least preventing them from rising as fast as they have been the last number of years. Also, it's probably important to note that the expectation is that gas prices are expected to come down, which not only will help with day-to-day operation of the boats, but also all of the different cost structures such as transportation, manufacturing, logistics, all of these different things that impact the price tag of boats, which is a real thing. So also, we talked about the interest rates. That picture is looking pretty favorable. We're in a good spot now, and it's probably just going to continue to be even better moving forward in the future. So with boat loans trending downwards and potentially getting even more attractive over time, 2025 may offer one of the better financing landscapes that we've seen in years, which could be really great. Last up, we just want to look at what different boat brands are doing what what is the trajectory of these different brands, and making sure that you get a boat brand that is headed in the right direction instead of one that is going to lead to much higher depreciation numbers moving forward. There's brands such as Centurion, Supreme, or even Nautique that could put you in a pretty good position as a buyer. Also, it's important to note that if they're not oversaturated with inventory, the dealers are in a better spot and are probably going to be able to provide you better service moving forward into the future and are at way lower risk of going out of business. That's been something that happened all through 2024 in different parts of the country. And there are a lot of people that have boats and they're in a really tough pickle with not being able to get them serviced adequately, which really makes a difference. So this leads us to the ultimate question we started with. Is 2025 an ideal year to buy a boat? Well, the answer depends on a few things, but primarily it's going to come down to what boat you are considering and what lines up with your ideal goals. If you're looking to just get the cheapest possible deal on a leftover model, it might be a great time to go buy one, especially if you're looking at like a Malibu, Axis, or a Taiga. But just keep in mind that a deal today might mean deeper depreciation tomorrow. On the other hand, if you're thinking about other factors such as overall cost of ownership, including resale value, value retention, future flexibility, and getting a boat that is just in higher demand, and there's probably really good reasons for that. Focusing on a brand like a Centurion, Supreme, or Nautique might be a great option in 2025, maybe a fantastic time to buy one because you can probably get a really fair price and get long-term support over time and do so before pricing heads higher up in the future. So in a stable economy with favorable tax and regulatory conditions and controlled production levels on the side of the manufacturer, 2025 looks pretty promising. It's crucial to your homework. Just don't assume that you can get a screaming deal on an older model and that translates to actually being the best decision or a deal. You want to look at inventory levels, how brand reputation may affect depreciation, and just what the overall demand looks like for different boat brands and why that is the case. If you pay attention to all these different factors, you'll benefit from your boat holding value better over time and being in a really good position long term. So in summary, 2025's boat market's shaping up to be a year of contrast. So some brands are going to struggle to move old inventory. They're going to be in a really challenging position, while other different boat brands are going to leverage all of the momentum that they have going and are probably going to make even bigger gains in market share for 2025 than what they did in 2024. So at the end of the day, the economic and financial conditions are looking to support buyers that choose to act wisely. So before you pull the trigger, just think about what matters most to you. Is it the lowest upfront price or the best long-term investment? If you keep these factors in mind, you can navigate the 2025 boat market confidently and make a really good decision. So I hope this has been really helpful in giving you some insights and information. In fact, if you actually click on the link that I have right here, you can actually pull up all of the market statistics for 2024. So you can take a deep dive into what they look like and what it means for you. I think you'll probably find it fairly fascinating. So hopefully this has really been helpful. Check out more of our information like this, subscribe and like us on YouTube, and we'll see you later.